Markets related to Bitcoin, little b for the currency, and Bitcoin, big B, for the network, and the collective discovery to understand, apply, and use this innovation, all about Bitcoin, all the time. I'm your host, Christine Lee, and welcome to episode number 1 of this show. Bitcoin flying into outer space. What a day to start off a show as Bitcoin goes to fresh record highs after Tesla's enormous 1.5 billion Bitcoin buy. The XBX Bitcoin price trading at about $43,000 now, up about 13% over the past 24 hours, according to trade block data. The XBX has been the most reliable Bitcoin reference price for institutions since 2014, with billions in assets under management benchmarked against it. Now, joining me now with more from Madrid is Coindesk Research Director Noelle Atchison. Welcome, Noelle.
Thank you so much, Christine. What a day, hey?
It's an exciting day. Now, in recent weeks, we saw that Tesla and SpaceX CEO Elon Musk changed his Twitter bio to #Bitcoin. He also tweeted out, in retrospect, it was inevitable. So on social media, we've known Elon to be a Bitcoin believer, but do we have any data on when Tesla began buying $1.5 billion worth of Bitcoin?
No clear data, no, but the SEC filing that we saw this morning did say that they changed some of their amendments in January and thereafter bought the Bitcoin. Also looking at the volumes, the exchange traded volumes over the past few weeks, we can see that there has been a spike in volumes in the latter half of January. We can probably assume that he did it over the counter because seriously, 1.5 billion? I mean, how do you get an order like that through the market without the market going totally crazy? But still, eventually OTC does touch exchange data, and so I think that's what we've been seeing over the past couple of weeks.
Do you think any of those buys, were they in tranches? You mentioned perhaps over the counter. Do we have any idea of, did that contribute to a spike in price in the month of January?
It could have. The fundamentals have been pointing to bullish sentiment for some time anyway, and it might be coincidental. Maybe the spike in volume that we saw in the past, that was other bulls coming in, other large buyers coming in. You made a really good point, though, when you were talking a moment ago about the size. I mean, let's be honest. We all knew that Elon has been learning about Bitcoin for some time, and I think it would have been more newsworthy if Tesla never did invest in Bitcoin. We know that Elon had been asking also about sizable orders, and that's what's got everyone's attention. This is a go big or go home moment. 1.5 billion. That's a very sizable investment. Sure, it's a probably single-digit percentage of the overall capital, but that's a very big statement, and that is what's making people of all types, I'm talking about professional investors, I'm even talking about retail investors, sit up and take notice.
I am curious, though, when these companies do these over-the-counter buys, does it move markets?
It can do. It will do probably, because most of the OTC desks, they have their main market makers are probably exchanges themselves, and so eventually it is going to hit the exchange data. It can be moved totally off the exchange. It can be bilateral agreements between large owners or interested parties, but the market makers operate on various different levels, and a lot of them are through exchange order books.
Interesting. I'm fascinated to learn more about, who was their brokerage and, how are they custodying their treasuries in Bitcoin. Now, in Tesla's annual report filed with the U.S. Securities and Exchange Commission, Tesla's saying that it may, quote, acquire and hold digital assets from time to time or in the long term, and expects to begin accepting Bitcoin as a form of payment for its products, quote, in the near future. So what is the significance of this, Noelle?
This is a fascinating trend that I actually wrote about in the newsletter this weekend. It's something that's becoming harder to ignore. The rhythm of announcements about Bitcoin payment services is getting faster, and it's also getting louder. I mean, we saw Visa last week announce that they were thinking about introducing cryptocurrencies to their payment rails. We've seen PayPal announce last week in their earnings call that they are going to be developing even further and launching in the very near future, as in probably in the next few weeks, the ability for holders of Bitcoin through their PayPal accounts to use them at the 29 million merchants on the PayPal network. We have large names issuing credit cards, not just debit cards, but credit cards, which are a slightly different construct. The Genesis and BlockFi are two names that come to mind recently. As for debit cards, a whole host of high-profile names that have issued debit cards with a view to trying to get people to spend Bitcoin. This sounds very counterintuitive. Why on earth would you want to spend an asset that you think is going to appreciate in value? And I actually don't have the answer to that, but I do know that this is a fascinating experiment that we are seeing. Many of us in the comfortable Western world think that we don't need Bitcoin for payments. It's an inferior payment system. And yes, compared to what we have, it is, but we do need to bear in mind that there's very large area of jurisdiction, the large parts of the world, or of the world's population, don't have that luxury. They can't, just send a Venmo to someone or even make an online transfer as easy as we can. So the Bitcoin use case for payments, it's something we really need to keep an eye on.
Right. So you mentioned this in your newsletter, which is Crypto Long and Short. Everyone should sign up on Coindesk.com, Crypto Long and Short. And you mentioned that, in the Satoshi white paper, that Satoshi had mentioned that it was supposed to be a payment system, or later on a store of value. So which is it? Or it should be all of the above?
Oh, wait, that's a very interesting question, and also a very controversial question. There's been very heated debates on Twitter and other online platforms about what Satoshi meant, and unfortunately he's not around to clarify. He did say at the opening statement of the white paper, it does mention payments systems. But maybe, just maybe, I'm hypothesizing here, maybe that was his way of getting people's practical attention. He has spoken elsewhere about Bitcoin's potential role as a store of value, citing its hard cap and citing the monetary inflation that was happening not even 10 years ago. I wonder what he would think.
I just wanted to fit in one more question in there, Noelle, but crypto exchanges Binance, Coinbase, Gemini, and Kraken, they're all having technical difficulties handling the heavy trading load today. Is this just another GameStop Reddit meme stock phenomenon, or are the fundamentals there for this price surge in Bitcoin?
That's a question of interpretation of the fundamentals. We can't deny that there is a bit of frothiness in the market. I mean, that price gap that we saw this morning when the Tesla announcement came out, I've never seen a candle like that. But that doesn't mean that the fundamentals aren't bullish anyway. And I expect the volatility figures are telling us that we are going to be seeing increased volatility going forward. Looking at the on-chain data, which is another fascinating thing to focus on, that we can see this kind of information about a tradable asset. The number of addresses that are accumulating, as in only accumulating, addresses that have done nothing but accumulate Bitcoin, has reached all-time highs. The number of holders of both small amounts and large amounts is steadily increasing. And so judging from the investor sentiment that we can glean from this on-chain data, the fundamentals are still bullish.
Fascinating. Noelle, thank you so much for your insights and joining us today.
Thank you, Christine. It's been fun.
That was Coindesk Research Director Noelle Atchison. Coming up, BlockFi CEO Zach Prince on how to earn using Bitcoin.
Yes, I can. Was that okay?
I would like to cover in history, 20, 30 years ago, it would have been the internet. It would have been the whole social media boom. Now this is our turn. This is this generation's turn to cover the future of money, Web 3.0.
I can't think of a more important story than this one to be telling. We're talking about the transformation of money itself. So to tell this story, right, the most significant story in finance that's around, we need new mediums, new ways to reach people, new ways to reach this global audience, the human beings for whom this is going to be most important. So this is why we're really excited to launch Coindesk TV, because it's another way to reach people. It's another way to communicate. It brings to life the stories that sometimes can be difficult to access.
We're going to see a huge paradigm shift. We're going to see how it lives digitally, natively in the internet. We're going to see that transformation shift.
This is a huge opportunity to tell a very, very important story that reaches a wide audience that has the potential to change everything.
We're building a financial system across the world with Bitcoin, several other cryptocurrencies, digital currencies made by central banks, and that is going to be epic.
This is a huge opportunity to do this differently, and Coindesk TV is going to sit right in the middle of all of that.
Welcome back. This morning on First Mover, we heard from Brian Brooks, the former acting comptroller of the currency, saying Tesla's Bitcoin buy is a bit scary for the rest of the world. Have a listen.
For people who are looking at the rest of the world, it's actually a little bit scary news, because I think there are reasons why the price of Bitcoin is rising so fast and why companies are replacing, dollar holdings with Bitcoin holdings. So just this morning, Christine, I looked at the money supply in the United States, and here's some shocking news that I'll bet you might have an instinct on, but you may not know these numbers. So did you know that the money supply in the United States since the coronavirus pandemic started is up 25%? And once this second round of stimulus is done here in the next few days, the money supply will be up 40% versus 12 months ago. That's crazy, right?
So joining me now to discuss is Zach Prince, CEO and founder of crypto lender BlockFi. Welcome, Zach.
Hey, Noelle, thanks for having me. I'm so excited to be here. Is this day one of Coindesk TV?
This is day one. Welcome.
That's great.
So let's start off with your reaction to the former acting comptroller's comments that the U.S. money supply will have risen 40% over the last 12 months once the most recent round of stimulus is done. So is cash risky to hold? But at the same time, Bitcoin is volatile. So what would you advise consumers?
Yeah, I mean, look, I think a lot of folks are becoming more educated than they ever have been on things like asset allocation and what can happen to the value of your savings if you hold them in different types of assets. I said when the coronavirus, hit and was starting to be digested by investors around the world, that this was going to provide potentially one of the greatest macro backdrops ever for Bitcoin for two reasons. Number one, the fiscal response, which we're now seeing play out and continue to play out, of printing money to stave off a economic depression was going to be tremendous. And we're seeing that happening. And number two, everything digital, because of the public health situation, is now favored to its analog counterpart. And so both of these things are highlighted perfectly for Bitcoin and create this kind of perfect condition for us to see the market performance that we're seeing recently. And the populistic kind of sentiment that consumers have is being directed in lots of different areas. But I think one of them is going to be this realization as the result of education that's coming from a lot of people in the cryptocurrency industry around things like the value of cash and what happens to it over time, and why it's not a good store of value relative to other options in the marketplace like Bitcoin.
All right. Well, BlockFi offers interest-bearing accounts and credit and trading. According to your website, you can earn up to 8.6% annual percentage yield paid out monthly. So, but why should users trust you with their Bitcoin?
Well, BlockFi is really the category leader for this part of the market, servicing retail folks with accounts where they can earn a yield not only on Bitcoin, but also on other cryptocurrencies like Ethereum and Litecoin and Pax Gold, and stable coins, which are one-to-one interchangeable with dollars in a bank account. We've been doing it since January of 2018 with perfect performance. We're the only company that's doing this that's domiciled and regulated in the US market with MSB and lending licenses and money transmission licenses at the state level.
Okay.
And we're backed by a tremendous group of investors who don't just write checks into something without doing a ton of research, like Fidelity and Susquehanna and others.
Why should people put money in BlockFi versus decentralized finance platforms that offer higher yield?
Well, they don't offer a higher yield, so that would be the first thing that I would encourage folks to look at. Are the yields you can earn at BlockFi on Bitcoin, Ethereum, and stablecoins are higher than the rates that you can earn on DeFi, especially if you strip out the token incentive from the protocols. So if you're just looking at, I have some Bitcoin and I want to earn a yield on it, the rates you'll get at BlockFi are dramatically better than the rates you'll get at DeFi. One other thing I would highlight is that there is real value in having a company that cares tremendously about our client relationships and the long-term value of those, especially in times of market volatility. So let's go back to March, when the price of Bitcoin, as we all know, declined pretty dramatically, one of the most dramatic declines ever in a single 24-hour period. If you're borrowing from a DeFi platform, you get liquidated, you pay a large fee, there's no one you could call, nobody cares. There's literally not even a concept of customer support. Contrast that with BlockFi, on the other hand. We gave our clients more time than we normally would, given the market conditions, and we worked with them to protect the positions that they already had in place and to communicate with them. And there's no issues with a smart contract where your Ethereum got liquidated at 0 instead of the actual market price. None of that stuff happens when you're working with a company like BlockFi.
All right. So can I pay for my new Tesla with the BlockFi software?
We're not doing a lot.
You don't have to answer that.
No, it's a great question. I want to bring up something from the prior segment. So you can move money onto and off BlockFi using your traditional bank account or using the cryptocurrency payment rails. We're also launching our first product in the payments category in the second quarter of this year, which is a Bitcoin rewards credit card. And on the previous segment, this was mentioned, and the comment was made that why would anybody spend their Bitcoin? I just want to be clear that our credit card is not meant to encourage people to spend their Bitcoin. In fact, they're not even going to be able to spend their Bitcoin using the BlockFi Bitcoin Rewards credit card. Rather, it's a dollar denominated. You're always spending fiat, just like with your traditional credit card type of product. You're just earning Bitcoin back on every transaction that you make with the card instead of airline miles or hotel points or traditional cash back. So you're spending the way that you already do if you're a prime consumer in the US, and you're getting your cash back in Bitcoin, which flows straight into your BlockFi account where you can earn a yield on it, trade it, get money against it, etc.
Zach, thank you very much for your update on BlockFi.
Thanks for having me.
All right. That was Zach Prince, CEO and founder of BlockFi. Time now for the chart of the day. This one from the Coindesk research team using data from Glassnode. While the price of Bitcoin is skyrocketing, so are Bitcoin transaction fees. Last week, the average fee reached its highest point since January 2018. Solutions such as the Lightning Network aim to solve these barriers by offering fast and cheap throughput on a transaction layer that anchors to the Bitcoin blockchain at certain intervals. Adoption of this technology is growing, but it is still in its early stages. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching Coindesk TV.